Is the market going to roll over? Is software going to continue to sell off? We're going to talk about that today. Hey, I'm Adam Anderson, owner of WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for listening.
Yeah, so first off, we're going to talk about the S&P 500 and really where we're going right now. One of the problems we've had is that software as a services has been really selling off. We're going to talk about that more, but how it's affecting the S&P 500. You can see we had a high here just recently and it sold off, came all the way down to this low, came back up, but we failed to breach that 7,000 high again, and it's gone down a little bit lower. So it does have that maybe rolling over. And so I'm really watching this next level of support here about 6750 is what we're really watching for as a level of maybe rolling over.
So long as it continues to stay in this trend, we've been in this up-down little channel since basically the new year. And so long as it stays in that trend, we should be good. One of the reasons we're optimistic is because when we turn and look at the subsectors, the prior leader, software and tech more broadly, has been experiencing a huge sell-off. So let's go over to the software component of the S&P 500. We're going to look at the ticker IGV.
I wanted to talk about this really quick here before we go to that. So sorry to interrupt you, Blake. So much of what drove the market this last couple of years is what we call the Magnificent Seven. And this is just a chart that shows NVIDIA, Google, Meta, Apple, Tesla, Amazon, and Microsoft, which are the components of the Magnificent Seven. And we can see here that Microsoft is down 17%, Amazon down almost 14%, Tesla down 7.2%, Apple down 5.8%. So we're seeing a real drawdown, and this really has to do with software, the idea that it's going to be supplanted by artificial intelligence, that people can create these services easily using artificial intelligence. So these are kind of the leaders on that are what's dragging down the market right now. And so this is one of the things that kind of gives me some optimism. So Blake, you want to talk about what we the IGV?
Yeah, so when we pull up the chart here, so this is the software, the under technology, the subsector for software-based companies. And yeah, we see that down about 30% off their high. And we are seeing some signs that they might be capitulating on these sales. They're not quite to their prior lows, down around 75, 76 here on this chart. And so we might see another 5-ish% pullback. So it might be a little early, but it is a good sign that we had that bottom a week and a half ago, and we're testing that again.
Right. So I feel like we could be very close to a bottom. Now I'm a notorious bottom fisher, and I'm always early on these things. So I do want to make sure that we see a confirmation of an upturn before I really start committing to this. I do feel like, at least when we're looking at this IGB index fund, is that it is, like Blake was saying, has hit a bottom there. This is the 20-day moving average. This is the 200-day moving average. So the first real obstacle will be crossing this over the 20-day moving average. We are seeing the MACD. This is another indicator, and it is flattened down here way at the bottom. We just want to see maybe the first indicator that this is in a recovery is this crossing over. So those are some of the things we're looking at. I did want to pick apart some of the components of this and talk about one company that some of our clients own, a very well-known software company, Salesforce. And so here we are. It is just in a world of hurt here. And from top to bottom, we are about a little over 30% down, right at 30%. And that to me is a significant downturn, because 30% is often the capitulation point when a company hits that amount of down. Now they've come out with earnings. They were fantastic. They're not showing any weakness in their earnings and their fundamentals. So this seems like it's more like a thesis out there that software is going to supplant these types of companies, especially like a Salesforce. And my feelings are, to change over, we use a CRM. We don't use Salesforce. We use a similar company. But for us to change over would be a monumental task. And for us to have faith in some AI agent that's doing this for us when we're dealing with confidential information and sensitive information of our clients, not something I would picture us changing anytime soon. So my feeling is this is overdone. So I'm looking at companies like this that they have the potential of turning around here, and that would, in lieu, look at the S&P 500 again, would maybe show some support. We're very close to support on these companies that are dragging this down at this moment. So that was one of the ideas that I had, maybe a little early, but the IGV is something that we could look at as possibly a purchase is, and also some of these components of Microsoft, some of these tech leaders that led us in the past, that this might be overblown. Last week, we had a lot of earnings come in that were very significant, and that's going to continue on this week. Maybe not as big of names that are going to come through, but all the information has been pretty strong. Specifically today, there's two companies that I'm really watching. Medtronic already came in this morning and reported, and they actually reported, fair, but it's down a little bit. Palo Alto Networks reports after the earnings today. That's a company, a lot of our people is a software, and also been beat down by the software sell-off that we've been seeing, artificial intelligence. This is a software company that protects people from malicious players out there. So I don't think this is a company that's going to be easily supplanted by artificial intelligence. As a matter of fact, they're using artificial intelligence in their services. So that's one we're really watching. But one of the most important ones will really be in retail, and that'll be Walmart that comes out on Thursday before the opening. So we're going to be really looking forward to see what Walmart has to say.
So that's what we're looking at in the market this week. It might be early, so be careful, but we'll be watching, looking for opportunities like this to mature. If you're interested to learn more about what we do here and how we look at the markets, WealthGuard Advisors, we're a registered investment advisory firm. And part of that is a fiduciary responsibility to our clients, meaning we're committed to putting our clients' best interests first. We specialize in personalized asset management and financial planning designed around your unique goals and objectives. If that's something that interests you, we'd be happy to sit down with you for a free consultation to see if we could be a good fit and see if we could be of help in your situation. Thanks so much for watching. We look forward to connecting with you soon.
Thank you. Have a good week.